So let's ask the $1 million question. What do you think is going to happen tomorrow?
Well, Elon seems to be in a good mood. He said it's going to be fun. So I always like when people's expectations are low. I like when people are writing the company off and they're saying, oh, it's over. They're never going to make any money again. Because that's when it's really easy to surprise them. And
Mm.
yeah, underestimating Tesla's never really a good idea. I think they'll have some surprises, some interesting announcements for us. I think the financials will come out to not be a bloodbath. I think it's actually going to be healthy. Uh, and I think people will be surprised by probably how healthy it is. You've also got energy. I mean, Lathrop, before they only really had a small megapack production facility in Nevada. Now they're really investing in making megapacks with Lathrop. They're going to be building a new megapack factory in Shanghai. I think you're going to see energy earnings. They're actually growing faster than the auto business already, just in terms of energy deliveries and energy financials. So that's obviously going to boost the net margin of the company. I think that's going to be very positive. And I think they've got some great things in the work. I mean, my dream would be if they said, hey, we've got this new Model 3, it's going to be up for order now, and it's got hardware 4. I'm really waiting for that to order it. It's looking like it's probably going to be more of a Q3 thing, but a surprise like that could be very well received. And, Tesla's always got a few tricks up its sleeve. We've also heard that, Cybertruck is now getting closer to production. It could go into production as soon as next quarter. I mean, we've been waiting for this thing forever. It's the most significant new Tesla vehicle since the Model 3 in 2017, really. So this is going to be a huge new product, and I'm sure we'll get some more details on that in the call as well. Um, FSD, I'm really excited to hear any update on FSD miles driven, the number of users, any sort of milestones they can share there. Them now, even later today, launching 11.4. This is the first time they're really releasing FSD to everybody. So, I mean, it's possibly the biggest moment in the history of the company. So many people are just writing Tesla off, not realizing that they're going through a major transition. I mean, this is a whole new Tesla with the Model Y 4680 structural pack, batteries made by Tesla, running FSD. I mean, this is a completely different Tesla product than has ever existed before. And it's really going to change the company, I think.
That's great. I think the backdrop of this earnings, it also has a sort of think about the rest of the auto market. Think about what GM, Ford, Toyota, Volkswagen, all these companies are going up against. All the data that I'm seeing coming, especially in the United States, you're having a lot of reports of blown out dealer lots. You have a lot of concerns around the affordability of vehicles, just straight up lack of anything that's under $20,000, $25,000, even $30,000. You can't find a freaking Toyota under $30,000 nowadays, right? So there's an affordability crisis. You have less sales out of car makers, and then you have lots that are full. And so I think that thing combined, I wonder what Tesla's earnings is going to look in comparison to the rest of one of the things that they play in, which is auto, because nobody else plays in energy and nobody else really plays in self-driving technology, right? So I wonder if that's going to start coming to the forefront with this first quarter earnings from all the automakers. It might take another quarter potentially, but I think that's a fascinating one to follow. I think the valuation of the company perhaps is not very dependent on everybody else, obviously, but I do think there are signals that we can get from the competition's so-called competition that might say, hey, maybe there's not this fear of pricing pressure that y'all were so worried about, because these guys literally can't make anything profitably, and their money-making businesses are collapsing right before our eyes, right? So that's going to be a very fascinating sort of thing to track. And I wonder if Tesla will get some sort of credit for that. I do think for me specifically, what I'm looking at, like what I'm looking for from the earnings is how much guidance can they give on the cost savings they're going to be able to achieve from the raw material costs starting to come down in line with pre-pandemic levels, and the ramps of Berlin and Austin and Shanghai. Let's say with the additional building they're building out there, just some sort of idea of how these things can progress and how these things are locked in tandem with their ability to continually drop price over and over and over again to become one of the very few car makers in the near future that's going to be able to offer an affordable car, period. Forget an EV, an affordable car, period.
Yeah, I mean, things really aren't looking good for legacy auto. If you look at some of these stories, you really go, man, interest rates are high. You've seen GM actually shutting down production because they have too much inventory built up. The dealers are losing it. I mean, we've come out of this crazy situation in the pandemic where prices were just going up and up and up and up. And Tesla is really sort of fighting that in a major way by saying, hey, it's time to stop this. We're going to go in the opposite direction. While everybody else was still raising prices in Q1 for cars, we're actually going to go lower and really sort of go for the jugular. I mean, this is such an insane competitive move. The competitors can't even make money on their EVs at the old higher prices. And every time Tesla has some increased efficiencies, every time they cut the price a few $1,000s, it's just another, kick in the face to legacy auto. It's just really tough for them, right? I mean, they couldn't even make money before, and it just gets harder and harder the more efficient Tesla gets. So, I mean, they're in a pretty challenging position. They're very behind on EVs. And if you look at some of these regulations, like, for example, the Biden administration just unveiled these new fuel economy standards that they're going to put into place. And it's getting more and more expensive to make an ICE car. At the time when EVs are getting cheaper and cheaper, ICE is getting more and more expensive because they're putting in laws all across the world that are saying, hey, you actually need to release less than this amount of emissions. And so they have to often install filters or more expensive equipment or a hybrid battery or something like that to get that emissions down. Or they have to buy regulatory credits from Tesla. And this is, people sometimes say, regulatory credits, that's not real, but it's very real money. It's literally legacy auto paying Tesla for polluting too much. And this is another thing that I think looks set to grow and could possibly sort of shoulder some of the gross margin impact from the price cuts. And it's only going to increase over time. As EVs become cheaper and cheaper, the only reason we don't have stricter limits on pollution is because people don't have another way to get around. So like if you're a poor person, you need a car. So you can't tax it overly that it's going to get too expensive. But if there's a really cheap alternative that doesn't pollute, if there's EVs, then you're going to see governments around the world make limits on pollution stricter and stricter and stricter over time, making ICE more and more and more expensive at the same time that EVs get cheaper and cheaper every year.
Dude, that's such a good point. I still think people might not grasp the fact that Tesla makes somewhere around $1 billion, maybe more, in ZEV credits per year from automakers. So they are literally paying for Tesla's factories every single year. Every single year. It's wild.
I mean, you remember that story? It was like Giga Berlin was actually paid for by Stellantis or something.
Yeah, like 1.6 billion or something. I forget what the number was. Yeah,
right. It's wild. They paid the whole cost. I mean, fate loves irony. The factories that are destroying their business, they paid to build them with regulatory credits. Wow.
Yeah.
I mean, what a scenario.
Completely fascinating stuff. Yeah, and it's like the momentum's not stopping either. I think the affordable car equation gets lost in this context because of, I think folks traditionally have looked at Tesla as such a luxury brand, quote unquote, and just a company that caters to the high end, that the sort of low end part of the segment is completely lost, but is very much in lockstep with Tesla's overall mission statement of advancing the admin of sustainable transport. And last time I checked, that's still on their website. So yeah, it's crazy stuff.